Hello, and welcome back to the Accounting Podcast, your weekly news roundup of news in the profession. I'm Blake Oliver.
And I'm David Leary. And Blake, don't talk anymore. I can't have you jumping straight into stories about your love of Elon and Doge and tariffs. We have to talk about app news, which is the root of our podcast. Originally, we spent almost every episode talking nothing about app news, and we didn't get to it last week. And so now we have to start with that this episode today.
Okay, fine. I know it's fair. I promised for 2 episodes we'd get to the tech stuff, and we did start this podcast originally as the Cloud Accounting Podcast, where that's all we talked about every week. So we're getting back to our roots this week. And the good news is there's plenty to talk about. We've got news from Xero, Flowcast, Intuit, Paychex, Pipe, Glean, Lilly, Google, PwC, Canva, and I think some more.
Canva is going to be on the show. It's kind of funny, actually, to think about.
Canva, this is great. Excel and Google Sheets users now have something to hate together. Maybe this will unify us once and for all. Canva Sheets is a real thing. It's an abomination, and maybe we'll get to see it in action. Welcome to our early live stream viewers. We've got Big 4 Transparency, 5 Coffees, Gator NYC with 4, and Boring Accountant with 3. What a nice countdown. 5, 4, 3. So, David, I'm going to let you pick where we start with the news about apps. Why not your favorite?
Well, let's first thank our sponsors for this episode.
Okay.
So our sponsors this week are Payhawk, Relay, Cloud Accountant Staffing, and RoboDebit.
Thank you to our sponsors for supporting us. Intuit is not one of them, but I think we should start there, David, because you spent 20 years at Intuit. What is new in the world of Intuit when it comes to AI dreams?
So there's 2 stories about Intuit. One is they acquired a company called, what's the company name? The company's called Deserve. And essentially they are a one of those credit card API platforms. So you can spin up virtual credit cards. So if you want to add credit cards to your app or offer credit cards, you'd use this type of a company. They acquired them. The announcement was April 14th. They expect to close it in Q3 of fiscal 25. It looks like it's going to be a talent acquisition as much as it is technical. But it's interesting because this means now Intuit is going to have the ability to possibly spin up virtual cards and have credit cards as part of the Intuit Bank, if you want to call it that, or QuickBooks checking, if you want to call it that.
QuickBooks checking, right.
But because this company's like an API first, this now becomes something they can offer all the developers that are on the development stack of QuickBooks and Intuit. So it's an interesting acquisition, especially if I tie it back to some news that I've been sitting on for a little while, is about Green Dot Bank. So Green Dot Bank powers the QuickBooks checking. And Green Dot has been having a little bit of issues. And when I say issues, they've been having more of leadership changes, and they've had some issues with their earnings. And let me click the article here.
I feel like we've talked about Green Dot in the past on this show, and it hasn't always been great.
No. Here it is. Sorry about that. So Green Dot, they announced a review of their strategic alternatives and leadership transition, and they're considering a sale, and the CEO has exited. They said in their February earnings release that they saw a 3% decline in its full-year adjusted EBITDA and expect to see a 9% decline in its full year for 2025. And so they've had a lot of management upheaval. They posted a $26.7 million loss, and they were fined last year for multiple violations for that, basically deceptive practices that kept customers from accessing their funds. And they had 2022, they had a contract dispute with Uber, and Republic Bank sued them in 2021 for a breach of contract when they backed out of a deal to buy. Republic's had a tax refund processing unit they were going to sell to Green Dot, and Green Dot backed out of the deal. So things are, so when I see Intuit buying a company that does credit cards, it seems like are they going to replace Green Dot out of their tech stack? Because you do that, you either build it yourself, you partner, or you buy.
Or if you're a big company like Intuit, you partner, you learn everything, and then you build it yourself and you cut out your partner. Yeah. Right?
So
Apple does this too.
And we probably wouldn't talk about it if Green Dot wasn't QuickBooks Checking, because that's what QuickBooks Checking is. It's exactly Green Dot.
Gotcha. We also have news from Intuit about their enterprise suite. They've announced some improvements. Intercompany allocations. Accountants now can perform intercompany allocations directly from bank feeds, expense forms, or bills. That's important if you've got multi-entity going on, which is the big thing about Intuit Enterprise Suite. Default account mapping. Users can pre-assign accounts for client transactions across various entities. And custom task templates are new. You can now create reusable templates or choose from industry-specific options. There are improvements to their advanced analytics as well. In the multi-entity hub, you can monitor key performance indicators across entities at a glance. You can now access revenue, expense, and profit projections at dimensional levels. And you can generate precise forecasts up to 3 years forward using historical data. And in your consolidated reporting, you can choose which entities to include in reports with improved side-by-side viewing. On the payroll side, you can now edit, backdate, and void past quarter paychecks without requesting support. That's a big improvement. Man, having to go back and fix payroll by looping in support, not so much fun. You can reverse employee direct deposit payments with no additional fees. And now you can monitor changes to employees, managers, departments, pay, and job titles. All these features are available now in Enterprise Suite.
So it feels like we're finally seeing the road separating here between what felt like was just QuickBooks painted blue to now it feels like these real enterprise level things are now being added to the product. I feel like it was a marketing move at first, and now the features are coming.
Well, and that's why we heard from a number of accountants that they were kind of disappointed because it's all about the implementation. It's all about how easy it is. And intercompany allocations, that's a big one. And if you can't do that from the bank feed and you have to go code stuff and then do the allocation, it really doesn't really save you that much time. So hopefully, we'll see some good feedback. I'm curious if any of our listeners are using Enterprise Suite, if you have tried these new features, if you think it's going the right direction or not. And this is important because there really aren't a lot of good options at that price point for small businesses, mid-market companies, very low-end mid-market companies that need all this intercompany multi-entity stuff. So great to see that. We've got news from Xero.
I have third thing from Intuit, since we're on the
Intuit. Oh,
Intuit,
you do? Okay,
kick.
Go for it.
An investor for Strive Asset Management is pressuring Intuit to purchase Bitcoin as part of their for their balance sheet in the same way he pushed GameStop to do it. And so he wrote them a letter on April 14th. Some of it, half of it was about their anti-Bitcoin bias. What happened, if anybody's done business with Intuit for a very long time, you can't use merchant services for guns, drugs, illegal activities, Bitcoin, crypto. You're just not allowed to use the Intuit tech stack for some of those things.
Right.
Apparently, there was a Bitcoin group at USC, and MailChimp banned them from using MailChimp. And there's some backlash, and then later the decision was reversed. So part of the letter was him telling them that they need to be more open and embrace Bitcoin. And the other half of the letter was, you need to buy Bitcoin. And he's really pushing them to do that. I just don't like any.
No surprise there.
He argues that this is a way to hedge against AI disruption. But arguably, Intuit is building AI. Intuit is deeply innovating around AI. It's not like they're just sitting there waiting for it to happen.
Yeah.
The argument's not good, and I don't want to see Intuit do this at all. Like, there's so many things they could put their money into. Take that money and buy engineers and build better stuff for accountants in the products.
If your shareholders want to gamble on Bitcoin in the public markets, they can do it by buying MicroStrategy stock. But this is, to me, this is just a strategy that the crypto lobby is using to try to push up the price of crypto. Is if they can get every public company to buy a little bit of crypto, that adds up and that pushes the price up. It's the same reason they're trying to get governments to buy crypto. It's the same reason they're trying to get all these like public funds to buy crypto. And eventually, though, you're going to run out of buyers. The reason they're pushing for all this is because they've run out of retail buyers. There's not enough money left in the retail side that wants to get into Bitcoin. People have either gotten in or gotten burned and got out, or they're in and they're holding. So how else do you get the price to go up forever? And here's the problem.
Corporate boards to do it.
You're going to run out of buyers someday. And when there's no more buyers of Bitcoin, what can you do with it? we still haven't seen a real use case for it other than, as a store of value, but it hasn't been a great store of value in all this tariff stuff either. So that argument is falling apart there. Gold, gold is skyrocketed, but not Bitcoin. So if Bitcoin is digital gold, tell me, why hasn't it gone up too? All right.
And if you think about that, like, I'm not sure, maybe there's some corporations might grab a little bit of gold and they might diversify a little bit, but you never hear about some corporation buying a chunk of their balance sheet in gold, right? They usually keep the cash because you want to be liquid so you can buy other companies and make decisions and move fast.
Either invest in your business or give the money back to shareholders. Those are the two best options.
And historically, Intuit's always been a share buyback. They buy back shares, right, and take them off the market to increase shareholder value.
If you want to increase the stock price, that's the way to do it. David, let's thank our first sponsor, and then I'll talk about all the Xero news.
All right. Our first sponsor is Payhawk. Are you still drowning in month-end expense chaos? Imagine getting multiple days back each month that you're currently losing to manual accounting processes. That's why I'm excited to tell you about Payhawk, a leading spend management solution that can automate your financial processes while giving you total control and instant visibility over all your company spending. Payhawk unifies your corporate cards, expense management, accounts payable, and procurement into a single platform. The best part, it works with your existing credit cards and tracks transactions as they happen, giving you real-time insights into your spend. No more chasing receipts. Payhawk's automation handles that. No more end-of-month surprises. See exactly where your money's going the moment it's spent. And with real-time integrations to systems like NetSuite, QuickBooks, and Sage Intacct, reconciling expenses is faster than ever. Finance teams using Payhawk are saving days of work each month while gaining better cost control, real-time visibility, and the ability to focus on strategic priorities instead of expense reports. If you're ready to transform how your company manages spending and to see how Payhawk can work for your business, head over to accountingpodcast.promo/Payhawk. That is accountingpodcast.promo/PAYHAWK.
And please do visit those promotional links. It helps our sponsors know that you heard about it on this show and supports the work that we do. All right, let's talk about Xero. Xero came out with two innovations. One is something they should have done 10 years ago or more, and the other is super cutting edge. They're like completely on opposite ends of the spectrum.
10 years ago, I'm trying to think, you were actively using it with clients then. What was this nuance that you hated about Xero 10 years ago that they finally fixed?
When Xero launched in the US, they did not have a traditional bank reconciliation like you would see in QuickBooks.
Oh yeah, that was my first interaction. I used when you and I merged our stuff together, one of our entities on Xero, and I get in there and I'm like, how do you reconcile? I was just dumbfounded.
And the answer is, well, you can, but you can't. Xero is built using one-to-one matching between bank transactions and the general ledger transaction. So in theory, you don't need to reconcile once you've matched the transactions. They are literally linked one-to-one. So as long as you can verify that the bank feed is accurate, which you can do with a certain type of report, or you can just go in and you can like check to see if the bank balance matches in Xero matches what you see in online banking at a particular date, that is a reconciliation. But that was mind-bending for US accountants because we're used to seeing it in a traditional reconciliation report, like how you learn in school. And Xero didn't have this traditional workflow or report. And they had trained all the accountants in Australia and New Zealand to adopt this new workflow, this new way of thinking, but they did not and could not get US accountants to figure this out.
Stubborn Americans.
Yeah. And, I always said to them, I said, guys, come on. You already have an uphill battle facing QuickBooks with 80% market share. Do not force accountants to learn new terminology. Present it just like they're used to. And it was a similar thing with like the report columns being in reversed order. So in QuickBooks, is it like from left to right? You see the oldest period to the newest one. In Xero, it's from left to right, newest to oldest.
I stumbled on that once too. Yeah,
which just like blows people's minds, and there was no customization of that. Finally, they built it. So here's the story. Xero now has bank recs, US style bank recs.
I'm going to have to try this out. You can assign me a task to do. I can reconcile.
Okay, I'm going to let you reconcile the books for March in Xero. Yes, you can define specific periods with date ranges and balances. And you can identify the discrepancies. You can see uncleared transactions. You can see reconciling items. You can then lock periods to prevent transactions from being changed, which is actually a huge improvement over just having a lock date. It actually locks the transactions. And then you can generate traditional reconciliation reports. So finally, and it took this long. And I don't know, maybe that's because the US leadership, actually it was the global leadership that had turnover. And the global leadership is now basically US people, right? People who actually understand the US market. So positive development here. Now, there's another announcement from Xero that is really cutting edge. They have launched a model context protocol. Here's a new acronym everyone gets to learn. This is your trivia question of the week, MCP, Model Context Protocol. David, have you heard of this?
Only you quickly sent me a text and said, this is going to change everything. Other than that, I just have not really heard this term.
So this is the new API. So API, Application Protocol Interface, that was the software language protocol that enabled cloud accounting, that enabled the cloud, all of these apps integrating with each other, Zapier, all that stuff, right, is through APIs. Well, MCP is like the API for artificial intelligence. It is a tool that allows large language models to securely access and interact with data. So Xero's API now has MCP, which means that it's possible to plug a large language model into Xero, and it can securely access and work with the data.
And the way this is built, like you can choose which model you want to connect to Xero, or is it
well,
a proprietary
this language? I think that you could actually, with this language, you could now, build your own model, hook it up. You could have a local model potentially running on your machine and connect it to your Xero data. You could use a model hosted in the cloud. If it's like a third-party chatbot like ChatGPT or Claude, if they supported this MCP, then you could chat with that chatbot and it could work with your Xero data in theory. Now, you might say, well, chatbots can already work with Xero.
Xero has their own, right? Didn't they create their own? Yeah.
And Zapier has chatbots, and you could actually, connect that chatbot to Xero, but it's not that great. And I've tried it. I tried making a bookkeeper AI agent with Zapier and connecting it to Xero, but it doesn't work that great because it has to go through so many steps where it takes your prompt and then tries to figure out how to do what you want through the traditional API, which is limited. So it really struggles to say, create an invoice through the API, because it has to then program your request into an API request and then send the request and then get the data back and try to figure out what it did wrong. It does not work great.
So there's like an orchestration layer.
Yes.
And this makes sense because if I think about, imagine if you had to get a different cell phone for every app on your phone. That's the way we are currently with chat. Like, well, I want to check on a QuickBooks, then I go to the QuickBooks chatbot. And if I want to go over here, it's a different chatbot. And now I have AccuFlow for my task. It's a different chatbot. When ultimately what you want is one, just so you have one phone, you want one chatbot that talks to these other services. And so, yeah, you're right. This is a good step in that right direction.
So here's examples of what developers could do with MCP and Xero. You could create invoices with AI assistance, allow users to generate invoices through natural language commands. You could simplify creating and updating customer information. I could just chat with my chatbot, my ChatGPT instance. It's connected to Xero. It could update customers. It could analyze transaction patterns to reveal business opportunities. That's a funny phrase, right? Like, that seems AI generated to me. But it could pull the data, not through the API, but directly through this MCP protocol, and then analyze it for you. And it could say, help categorize, review, and respond to invoice-related tasks. So like send follow-ups, update invoices with late fees, do all that kind of stuff. I think it could do a whole lot more because now it has access to basically do whatever a human could do. Maybe even more because there's not always an interface for everything that a human needs to do in the Xero data set necessarily. So I'm excited to see this. I would love to be able to build a journal entry bot, right? A chat bot that can do journal entries for me in Xero, like maybe do our accruals and deferrals. That would be sophisticated. You could do that with this type of language. So All right, that's it for Xero news. David, you had some news about Paychex, it sounds like.
Yeah, so Paychex is acquiring Paycor for $4.1 billion in an all-cash deal. So Paychex, who has been around a long time, they're up there in Rochester, New York. It's been a little, I haven't heard anything new from Paychex in a long time, them doing anything exciting. And then Paycor is a human capital management platform that also does payroll. So this is going to let Paychex get out of just processing paychecks and get into that whole HR stack, if you want to call it an HR stack. I'm not HR tech, whatever you want to call that. And that's going to basically give Paychex stronger capabilities in talent services, upmarket sales, and it should help grow Paychex. I mean, when you spend $4.1 billion cash, you probably want it to grow your company.
News from Flowcast, my former employer, the best tool for close management that I'm familiar with, but hey, I'm biased. I have shares. Flowcast has introduced AI agents. They're calling it groundbreaking capability that allows accountants to automate complex, recurring workflows across close management, compliance, and reporting functions using natural language instead of code. Examples include a journal entry agent, which automates the creation of journal entries. And the example that was given in a demo of this online is Coupa accruals. So if you're using Coupa, yeah, David, you roll your eyes. I know some people are forced to use Coupa. The accountants that are forced to use Coupa also don't like it very much because turning that into journal entries in your accounting system is historically a very manual task. So this agent that was demoed goes into Coupa and it pulls all the data that you would need to massage in Excel. And it does that and generates the journal entry that then can be reviewed and posted into NetSuite, all from within Flowcast. And the best part is every step of the process is defined and auditable, which is a really big point, that if you're going to post all these complex journal entries, you need to be able to internally review it and confirm that it's accurate because an AI is working on it. But also your outside auditors, your external auditors need to be able to look at all of this chain of thought and review it and sign off on it. And so what's great about this is that if you're using Flowcast, you use the AI agent to do this stuff. Now all of that is linked to the transaction in NetSuite. The auditor can click through from the transaction they're auditing into Flowcast and see everything.
What kind of, like if I was doing this manually before, how long of a process would this have been to get to complete this?
In the demo, they said like a day.
So it's shaving a whole day of work off.
Yeah, and it looked like when you look at the spreadsheet, the CSV file that's downloaded and how it has to get transformed, it has to be, they might be exaggerating a little bit, but it's got to be hours. I could see this being days of work in a big company.
And somebody has to do this once a month, every month.
Forever.
Forever.
And now it's a click. Now building it all out takes time, I'm sure, right? You got to basically document the whole process and teach the agent to do it. But once you do, it can do it over and over again. It's a repeated process, done the same way every time. Another example is taking unstructured data and standardizing it. They call that their data transformation agent. And then you can also create your own custom agents. So a series of prompts that take input data and produce an output in the accounting system, like a journal entry. So a great example of that would be like payroll journal entries. Take the report you get from Paychex, for example, that export file, and write instructions in the tool as to what you need it to summarize, how much detail you need, what accounts to use, give it all the mappings, and then it will do that. It'll review the report, create the workbook, post the entry.
And just to connect this back to the Xero, so right now it has to create API calls to go post that entry. In theory, it'll just communicate directly with the Xero MCP.
Yes.
Okay. I want to say
using the MCP.
What's that derogatory term my kids call me all the time? Like the Sims that don't move.
Like a boomer?
Yeah. No, the non-playable character, NPC. It's not an NPC.
Oh, NPC.
Yeah. It's not non-playable character. Okay. I almost said the wrong acronym.
They call you an NPC?
Yeah.
But you have your own podcast. You can't be an NPC.
It's easy to happen. Kids will do it.
Pipe and Glean. David, tell me about what's going on with Pipe and Glean.
Yeah. So Pipe is acquiring Glean AI. So Pipe essentially is a API company for adding finance loan type things and credit card, virtual cards to platforms. So if you want to add functionality like that to your app, you would use an app like Pipe to do that. And Glean AI is really in that enterprise bill pay platform. It's competes with Bill.com, in that space a little bit. So Pipe is buying Glean, which is interesting because Glean is more of a front-end user product and Pipe is an API product. So I don't know where the overlap is or what the next steps in that'll be. But I mean, if you're going to be in that virtual credit card business, you probably have to be in the bill pay business nobody wants to adopt two tools. Like you don't want to we have this for procurement and we have this for credit cards and we have this other tool for our bill pay. People just want one encompassing tool for all this. They did not announce how much it was for.
Good on that?
Yeah, good.
We've got big news from Google. Google has released a new formula for Google Sheets. Equals AI. Now, I tried doing this in my own Google Sheets. It's a workspace. It's always one of those things. They show you this great video, then you try to go do it, and it's like, oh, you're not part of Workspace Labs. Please apply to be part of Workspace Labs. So I had to fill out a form. So hopefully we'll get access to it. It'd be nice if they could just release stuff and then show it to us. Marketing folks always got to be way ahead. So anyway, I found a video on YouTube. Peter Horner, he is demoing the new function. So I want to show you what kind of stuff. Basically, what this function allows you to do is that you can type equals AI, and then there's two variables. You point, the first variable is you just write a prompt, whatever you want to do, right? Like you would normally type into a prompt. And then the second is whatever data you want it to look at. Very simple. So an example would be equals AI, and then the instruction is summarize the key themes from this survey data. And this is a table of survey data. Keep it to one sentence. And then you just point it at the multiple cells of the survey. And you can see, right? So we're actually selecting a range of cells. So we have a survey data with a bunch of columns, and then we have all the answers. And now
that's basically what you do if you want to build a graph. You'd go choose all the data, then you go press the graph button. Okay.
Yep. So now we have a one-sentence summary, and this is a course review table. So it's like there was a survey sent out to people who took a course, and we've got a one-sentence summary, and it just generated it. And the example is the survey respondent rated the course content, instructor, and online resources positively, although some aspects could be improved. And then he just drags that down, and it does it for every single row in the table.
This is really smart because nobody wants to, especially for accountants, like this is super powerful because nobody wants to go to a different product, type in what they want, somehow connect it back to data, get the results, paste it back in. Like you just want to be in the field. Like this is where accountants live. They live in that cell of the spreadsheet or whatever cell they're in at the time. This is really smart.
No more having to pull in the sheet into ChatGPT and then get an output. It just happens right inside of AI or right inside of Google Sheets using Gemini. So it's also secure, right?
And then in theory, I'm assuming this is going to work as a permanent formula, even though it's not really a formula, but if I change the data in the table, am I going to get typical a different summary? Is it going to give me the same magic that spreadsheets have given us for decades?
Looks like it. So here's another example. I think the prompt there was just slightly different. It was summarize the key themes from this survey data, keep this to one sentence. And then he did it for all of the rows and dragged it down. What would be another example? Let's do one. Analyze the sentiment of these survey responses and then select the range. And so now we get a sentiment analysis, and you drag it down and you can see, okay, some of the sentiment is neutral, some of it is positive, some of it is mixed. That's really interesting. So you could then like prioritize outreach to negative sentiment, or you could prioritize outreach to customers with positive sentiment, say to get a case study or something like that. Here's an example of using this tool to generate emails. So the spreadsheet is now a list of students and their attendance and their scores in English, maths, science, history, art, Muggle studies. It's a Harry Potter data set, and house points. And so this YouTuber uses the formula, says equals AI, and then the prompt is create a concise and positive email to parents summarizing the academic performance of their child, include the subject scores and attendance, and then suggests the whole range of scores, and then selects, you know, all that in that particular row, and then you can drag it down and you can generate it. And so like, here's the example. Now it's one of those things where I think you have to like click run to refresh the data. So then here's, you know, here's the email. Dear parents, we are pleased to share Cedric's academic progress. He demonstrates strong performance across subjects, particularly in English, 100, maths, 99, and a commendable 96% attendance rate. His overall performance is excellent. Sincerely, and then a placeholder. And it does this for every student. And it personalizes it for every student in the table. Imagine just like how long that would take.
Well, I really see where this, you know, there's all these features of Excel that you always forget, but you'd use it and you'd have to go back and retrain yourself. Like when you want to separate a first and last name from one column into two columns, or strip out the domain from an email address, you'll be able to just say what you want and it'll do it without you having to go find the formula and retrain all the syntax of trying to write that formula out.
Here's the last example in the video. Translation. So take those emails that you just generated for each student and now translate them into Spanish. And the prompt is just translate this text from English to Spanish. And it does it.
And you never leave the Google Sheet. That's amazing.
Drag it down. It does it for every email. So that's really neat, right? That is making AI real for accountants. And I'm very excited. Now, there was another announcement from Google, Agent Space, Google Agent Space.
Before you do that, let's jump into our next ad.
Okay, go for it.
Relay. Between Blake and myself, we now have 3, 4, maybe 5 business entities, 20 or so checking accounts, dozens and dozens of virtual cards. It would be impossible to manage all of this if we weren't using Relay as our small business bank. Relay is truly a part of the tech stack we use to run our businesses. Relay allows Blake and I to each have our own logins. We grant access to our team and even our accountant without sharing passwords or two-factor authentication codes. Relay allows us to grow and scale our banking needs without ever going to a physical branch. I recently added an account to receive inbound merchant services with just a few clicks and had to create a payroll checking account, again, just a few clicks, and I instantly have access to my ACH info to give the payroll provider. With Relay's virtual cards, we can issue debit cards to our team around the world for needed business expenses. I can instantly spin up new Visa debit cards and set both daily and monthly spending limits on them. And when a team member doesn't need their card, I can freeze it until they need to use it again. Relay also has an automation features to sweep money automatically from one account to another based on dates, amounts, or target balances, or even percentages. For example, inbound payments could be split daily to your payroll, sales tax payroll, operating, and savings accounts based on predefined rules. To learn more about using Relay for your firm and clients, head over to accountingpodcast.promo/relay. That is accountingpodcast.promo/RELAY. Thank you, Relay.
Thank you, Relay. More big news from Google, Agent Space. I'm going to go ahead and play this video about Agent Space, and David, feel free to interrupt, and we can skip around because it's like 5 minutes. I don't want to show the whole thing.
You guys got some serious party in the back going on.
So for the next few minutes, I'm going to be a relationship manager at a bank. Starting with a quick tour, this is my homepage, authenticated and personalized just for me. The agent gallery, lets me see my company's approved selection of purpose-built agents, including ones powered by third-party models like Llama and Claude. You see we've got some Google-made agents. We have agents that my bank has made available to me, either ones we've created or ones built by partners.
The most unrealistic part of this is that a bank is the one adopting this technology first. That's the most unrealistic part of this demo so far.
And then the best part, my own personal agents, which I can build directly inside Agent Space with this button over here, or even easier, just from having a little conversation. Let's see how easy it is to create an agent to automate a daily task. Now, it's critical for me to stay on top of what's going on with my clients, so I start every morning with a portfolio analysis. And I'm going to use a clipboard because no one wants to watch me typing. Run an analysis of my client portfolio and identify potential risks and opportunities. This only uses information that I have permission to access. It knows which clients are mine and summarizes top points from my data sources like OneDrive, Salesforce, or Dun & Bradstreet's. If I have questions, I have a direct link to my sources here. And if I need even more control, I can refine that list of sources. But Agent Space doesn't just summarize information. It's interpreting my question and surfacing what matters most. For example, in this chart, I can see Agent Space's flag that Acme General Contracting might have some cash flow problems in the future. Already, it's given me a massive report, which is going to save me a ton of manual research. And I can go ahead and read this later. But for now, let's set up an agent so I can keep an eye on Acme. Agent Space automatically generates an agent plan based on our conversation so far. And this is good, but I think I want more. I'm going to have it generate an audio summary and send it to my inbox so I can listen to it on my morning commute.
Uh-oh, David. Audio summaries. Sounds like a podcast. We might be out of a job soon.
And just like that, I have built my own custom agent to use whenever I want without writing a single line of code. Now, Agent Space has identified a cash flow problem with Acme General Contracting. I need to dig into that. Maybe this is a problem with construction in general and not specific to Acme. Agent Space has already identified that possibility as a suggested follow-up. So now let's go ahead and deep dive into general contracting industry trends. This activates Google's Enterprise Deep Research Agent, which starts by telling me what it plans to research and in what order. At this point, I could edit this plan if I wanted to, but it looks pretty good, so I'll start the research. Now, I do want to call out, we've cached the plan and the results here. Normally, this would take a little bit longer. This agent is pulling in real-time information from Google Search to build its report. But even cooler, it's also searching my internal enterprise data and adjusting this plan in real time, adding additional questions based on what it's going to find along the way. And again, an incredibly insightful analysis, including some source links, but thankfully, here at the bottom, it also is going to give me a great, succinct executive summary. Let's take a quick look at this.
Okay, and there's executive summary. They're showing off all the deep research capabilities, but that's nothing new. You could do deep research with ChatGPT. You can do it with Claude now. You can do it with Perplexity. But here's what's different, David, why this is game-changing. It's because it has access securely to all of the data inside of your business.
And that's where I was going with this. Like, I think this is a very genius product that Google's launching, because right now I think AI at companies is Wild West. Even our own, like we have developers using this AI, we have course writers using a different AI. We kind of have a bunch of subscriptions. We don't have it consolidated into a place. And this reminds me of those apps like Okta, where, you know, your employee, all the cloud apps that employee has access to have to be launched from an Okta dashboard of some type. It's kind of like that. Here's all the AI we're letting our employees use, presented in one spot. You as the employee still have freedom to use the different tools, maybe combine the different tools, create like all the stuff he's showing, your own personal experience. But it gives IT departments and companies, CTOs, control, and that's what they want. At the end of the day, like you said, access, controlling what access to the company data it gets, et cetera.
And that's why even though Microsoft and Google have been moving very slowly when it comes to AI, they could end up winning the whole race, because these LLMs are open source and they're really good. So it's not like OpenAI has some amazing LLM that's any better than anyone else's. We saw a Chinese company, DeepSeek, come out with a better one. And we've seen Claude come out with better ones. So that's why the OpenAI's crazy valuation, to me, might just be a short-term thing, because long-term, the value is not in the LLM itself. It's in how it's integrated into your business systems and processes and your data.
Agree.
And I would not be comfortable giving OpenAI access to all of my company data just based on what I know about Sam Altman and his ethics. So that's a big problem for OpenAI. They may be selling tons of $20 a month subscriptions to people who want to turn their dog into a human, or want to make funny,
make themselves a doll, right? Everybody's doing the dolls.
or turn photos into Studio Ghibli illustrations, but that is not long-term enterprise value. I mean, maybe, I mean, they're making a lot of money doing it, but it's also costing them way more than they're making to do that. We know that because they had to limit it. So I want to play another video for you. This one is from OpenAI. This is OpenAI's CFO, Sarah, talking specifically about deep research and the feedback from bankers. This is going to really change how people do research on, I mean, it's already changing how people do research when it comes to investments. And it's going to really change how people do research for tax. It's going to, I mean, if you are not using deep research in ChatGPT or in Perplexity or in Claude, you're wasting your time. So let's hear this.
I'm just coming from a meeting with the CEO of another bank, I will not mention it, and we had been asking him about GPU financing, very top of mind for me. And so the team had effectively used deep research to go pull a report. His colleague sitting next to him, who's doing some of that work and looking into, said, I read that report. It was much better than what we did as a team of 2 MDs, 3 VPs, 6 associates, 10 analysts. I'm a little embarrassed that we didn't do the deep research report first and then use that to help us ideate and iterate. I'm just coming.
Did you hear that? What does he say? Like, you know, directors, analysts, like team of over a dozen people, and OpenAI's deep research came up with a better result.
And that's the threat. Everybody's worried that AI is going to take away the grunt work, but not really. I think it's going to take away the reporting and that higher tier where people like, well, I'm so valuable. The analysts, like these positions that have paid very well at corporations for decades may not exist soon, because the time it takes that person, even if they're good, it's going to take them weeks to build what can be done in 20 minutes.
Or it just takes one person now using deep research to do this kind of stuff.
What used to be a team of people at a corporation. Yeah.
I wanted to try this for myself because I'm not going to take Sarah Fryer's word for it. She's the CFO of OpenAI. She's got, you know, reasons to be very bullish on their product. So I tried this in Claude. And I think this was actually even before Claude had deep research. I just used the regular Claude 3.7. And I used an investment prospectus from Mother Road Brewing.
I think I sent this to you because
yes,
it's a brewery I like out of Flagstaff. I know you went there once and you liked it. And I saw that they were trying to raise funds. And I said, hey, we should invest in this. And then you went and decided or processed this.
I love Mother Road. It's my favorite local brewery. I buy the beer in our local supermarket, Tower Station. It's like my favorite local IPA. It's on tap everywhere at all the good spots. And they're raising money. They're doing some sort of equity crowdfunding campaign. I don't know exactly what the details are, but you can buy a share of Mother Road for as little as $250. And they've got it stamped on all their boxes, and you can go to the website and you can invest. And I was thinking to myself, well, I really like the idea of this. I love the product, but I don't have the time to go read this giant investment prospectus. It's a typical like SEC filing, like an Edgar, and it's giant and it's got all the, like the financials are buried deep within it. It's hard to read. I'm like, I wonder if Claude could help me with this. So I got it into a Word document format and I attached it to a Claude conversation. And actually I went one step beyond that. I created a project called Investment Analyst and I gave it custom instructions. I said, You are an experienced financial analyst tasked with evaluating investment opportunities. Your role is to analyze the provided documents thoroughly and provide a comprehensive assessment to help make informed investment decisions. And then I give it the aspects to consider, 6 different aspects. I tell it to address any specific questions or concerns. I give it the format that I want for the comprehensive evaluation, 7 different points here. I'm not going to dig into all of them. And then I tell it to, give me the analysis and recommendation in a clear, well-structured format. And a few more things. If you want to know how I made this, I didn't write this all myself. I used another Claude conversation to create the instructions, to do a Q&A with me to get what I wanted. So anyway, I took these instructions once I was done with it. I dropped it into a Claude project, and then all I had to do was the investment prospectus. And I got this evaluation. And here is the, let's see, where's the recommendation? Here it is. This is a high-risk investment opportunity with potential for modest returns. I recommend selective investment only for investors with high risk tolerance who can afford to lose their entire investment and who have a strong interest in supporting craft beer businesses. Invest only what you can afford to lose completely. And it goes through a detailed analysis of their financials, including their profitability, revenue, expenses, balance sheet, debt position, cash position. Their financial condition raises serious concerns. Revenue growth is positive, but losses are accelerating rather than decreasing. The balance sheet shows a negative shareholders' equity, indicating the company's liabilities exceed its assets. This makes the 41.1 pre-money valuation claimed in the offering seem extremely ambitious and potentially disconnected from financial reality. And then it does a competitive landscape analysis. It does a market position analysis, growth potential and future prospects, risks and challenges. I'm scrolling through this so fast you can't even read it. It identifies the management team and corporate governance, industry trends and macroeconomic factors, strengths and weaknesses. So it identifies that they have a strong brand, decent revenue growth of 17.8%, that they have a forward-looking product strategy, and then it identifies weaknesses. 7 different weaknesses, including financial performance, high debt levels, customer concentration. One customer is 68% of their revenue. I don't know if I would have pulled that out of the investment prospectus. And the limited cash reserves. And it makes a table of the risks. Risk factor, potential impact, likelihood, and mitigation. Can you imagine how long this would take one person to do?
8 hours, easily.
Minimum.
And that's if you're good at it. That's if you do it on a regular
all
basis.
the time, right? Yeah. Wild.
What I liked about it surfaced something that was so obvious that you just can't see in the prospectus, which is they want to use this money to stop brewing beer, and they want to make one of those fireball-y alcohol.
So they want to make
water things or something.
One of their strategies is expanding into non-alcoholic and other types of like beverages. And I'm thinking to myself, well, they're popular because they make really good beer. This to me is like a strategic issue. Now, I don't think the analysis called that out, but by reading it, I was able to figure out, that was me, right? Okay. So by reading it, I don't know, I could figure that out. So it allowed me to get to what I think is probably the most important thing, which is strategically, I don't agree with the direction. I think they should stick with doing what they're good at, not trying a bunch of new things, especially when you've got high debt levels, right? Stick with what you're good at. Do it better, cut costs, improve margins, get cash flow up, reduce your debt, get into a sustainable place before you go off on adventures.
Agree.
So, and now again, that's not going to replace an investment analysis or an analyst, but an analyst who has access to that tool could then come up with much greater insights. And I, as an investor now, oh man, I'm going to be using this for everything. Everything.
Did you say you had a story about more sheets, but it was Canva?
Yeah, so Canva released a Sheets feature. I have a video of it if you want to see the video of the abomination known as Canva Sheets. So this is going to unify us, David. This is finally going to bring us all together. The Excel lovers, the Google Sheets lovers, we can stop fighting. And we can now unite in opposition to Canva Sheets. Here we go. This is from their Canva Uncharted keynote, their customer keynote at their conference.
Visual Suite is now all in one design.
Yes, I might have heard that once or twice. And we are so excited about the Visual Suite 2.0, but there has been something missing, something that will make it even better. It's a missing piece that has something to do with
Data.
People got excited.
Data is now a critical part of design. If you think about charts, forms, reports, dashboards, or infographics, this is all visual storytelling that starts with data.
Data also fuels the best marketing content today. It makes it personalized, it's localized, and it's responsive across every channel. But working with data is still incredibly complex, and it's inaccessible to most people. And this is something we've heard loud and clear, time and time again, and it's come through in all of your wishes and requests.
Hi everyone! Hi, my name is
My biggest Canva wish.
One thing I'd love to see with Canva,
I wish for Canva.
I would like to see a creative way to polish up data visualization.
And I can put formulas in my table, and then it will auto-calculate.
I would love a way to visualize data quickly and on brand that's ready to go.
And I hope this can also be expanded to page resizing.
I'd also love if I could use AI to generate my Instagram carousel slides.
Way to streamline creation that makes a single document and auto-generates into all the materials I need.
And not have to use the other programs that make me fall asleep at my desk.
Like Excel.
As you know, at Canva,
You want me to pause it, David?
Yeah, I was going to say, so I watched a video of the actual product itself, the demonstration. And Canva built a spreadsheet in their app, which is kind of crazy because that means now you have to get data into the app. And the only way to do that is to type the data in.
You want to see that? Can we show the video? Here, I'll mute it.
To that part?
Okay. Here's the actual Canva Sheets. Sorry for that build-up. Oh yeah, this is going to be good. Actually, and now we have to describe what we're seeing on the screen, right, for our podcast listeners.
It's an emoji-driven spreadsheet, if that's the best way I would describe it. Imagine emojis all over your spreadsheet.
Yeah. So it's sort of like workflow software, right?
Yeah, it's pseudo workflow, it's pseudo Airtable, it's a pseudo spreadsheet. But there's a bigger story here that I think even Canva missed.
Which is?
So Canva has templates for yearly financial reports, right? They have all these great graphs. They have all this stuff. And yes, now in theory, you could connect the graphs in those to a table you make in Canva, which is crazy. What they really need is a API to QuickBooks or Xero. They need to connect through the API to the accounting systems. And this destroys all these apps. Like all these third-party dashboard apps that exist, they will never exist anymore because you're going to have this amazing financials that you could give to your. Imagine delivering a financial report to your client that came from Canva with proper data in it. And that's the piece they're missing on this. Like, I don't think people want to do their spreadsheet work in Canva. But if you can connect Canva to your actual data that's in the accounting system, et cetera, this could be a huge deal. And I think they've completely missed it. Maybe they've built this for their own customers. Maybe their customers are not heavy Excel users and they just need a little table to track, some things they've built in Canva. I could see that, but I think they're missing the bigger opportunity here. They could destroy the entire, what's that? Spotlight reports, all those Fathom reports, all those fancy iPad kind of dashboardy tools could all just go away because you will have these amazing Canva reports to give to your clients.
David, let's keep going with app news. We got to get through it all. Here's a quick one. Google's a monopoly. Yes, a judge has ruled that Google is a monopoly, basically 20 years too late. And now it's not going to be a monopoly anymore because AI search is going to destroy its monopoly. So this is how it always works, right? Microsoft, monopoly. But like it was already not becoming a monopoly anymore.
By the time the legal stuff catches up,
it's too late.
The market stops it.
You had a story about a data breach, Wolters Kluwer?
Yeah, let's jump into another ad. Well, if you want to read the ad while I pull up the article.
Okay, great. Thank you to RoboDebit for sponsoring this episode. As an accountant, you know the drill. Constantly looking up account balances, then computing and posting
I had
these.
to interrupt you, Blake. You skipped one. It's Cloud Accountant Staffing. You skipped
Stay
one.
tuned for RoboDebit later in the episode. Thank you to Cloud Accountant Staffing for sponsoring this episode. In case you missed the last 100 or so episodes, David and I have been discussing almost weekly that there is an accountant labor shortage. Regardless of the root cause, the problem is real. My social media feed is full of firms attempting to fill open positions on their teams, but how can anyone increase their staff size if everyone is attempting to hire during a labor shortage? That is where Cloud Accountant Staffing comes in. They will help you hire full-time team members for your firm that reside in the Philippines. How much would your firm change, or for that matter, your life, if you could add 40, 80, 120 hours of capacity to your firm in 2025? Cloud Accountant Staffing was founded by a firm owner who grew his firm using offshore talent, and now he is applying everything he learned to help you grow your firm. If your firm is in need of expert bookkeepers, accountants, CPAs, or virtual assistants, head over to accountingpodcast.promo/CAS. That's accountingpodcast.promo/CAS.
So let's jump into this data breach. So Wolters Kluwer had a data breach, and they're currently investigating this data breach. They didn't discover it themselves. The way it was discovered is a cyber criminal posted the company data on an auction in the dark web. They basically are selling 3 to 6 gigabytes of data starting at $15,000, and it includes full names, emails, phone numbers, addresses, and job info.
It does not include passwords.
Does not include passwords, and they say no financial or tax data appears to be affected. But this is just what they were selling. That doesn't mean they don't have the other data. This is just what they bundled up to sell. It's not good. It's funny because the company believes the breach is currently limited to contact data tied to its health journals division. But again, like if you didn't detect the breach and you saw your stuff being sold, that's the real concern.
Yeah. This is like you look on Craigslist and you see that like your bike is on Craigslist, and then you go down to your garage and realize your bike's gone. And you wonder what else is gone.
Exactly.
You don't know.
That's a good way to
right?
relay that story.
Yeah. So Wolters Kluwer, if you have information, we would love to hear it and relay it to our listeners, because I'm sure many of them are going to be nervous about this data breach. I sure would. So yeah, if you start getting emails from Wolters Kluwer, I mean, basically just now, any Wolters Kluwer emails, be very skeptical. Like look at the sending domain, because it could be that data set would be great to use for phishing attacks, right? Reset your password on Wolters Kluwer. Click here. They've got the emails of all the users.
Two-factor. Make sure you're using two-factor.
If they support it. That's part of the problem sometimes. Okay, one more AI story here. And this is not actually about a specific feature. This is about disclosure. So should you tell people when you use AI?
In the same way, if I take somebody's tax data and I move it overseas, I have to disclose that.
That's a requirement.
Okay.
For CPAs, for I think enrolled agents. Like I don't know all the specific rules, but I know that
it's an IRS data privacy thing.
There are lots of rules about that, disclosing it. What about disclosing AI use? And I'm not just talking about like from a legal perspective, right? I'm just talking about personally. Is when you do something really cool with AI, do you tell people I used AI to do this? Or do you just show them the really cool thing you did and then they think you're a genius? Because my experience is that when I tell people I used AI, they are not nearly as impressed.
That's true. Because then I'd probably take their opinion, well, I could have done that myself. Right? Even though there was some skill to, what's the word, prompt jockey AI to get an impressive result. Yeah, should you disclose it? I think if you're passing clients possible financial data through it, you probably want to disclose that. Like,
Sure. But let's just say that none of that data privacy is an issue. You've just used AI to do some work
for your
and you're
manager,
showing
and your
it to
manager
me.
is super impressed with you. Blake's
Yeah.
such a great employee, and then I found out you're using AI. I don't know. I think it's going to be a culture thing where you work at, right? Like
Depends
if
on the
people
manager,
value
right?
results, it doesn't matter. If people value results, disclose it because they're not going to care. But if people value, let's lack of a better word, time, how much time do you spend on this? They're going to get upset, right? If your culture is time driven, right? So it depends on the culture of the company you're at. That's when you should disclose.
New research from HEC Paris reveals that employees who use AI tools like ChatGPT without disclosing it, also known as shadow adoption, tend to receive better evaluations from managers. When employees disclose their AI use, their work was still rated favorably, but managers undervalued the effort behind it. 44% of managers suspected AI was used even when it wasn't. So there's significant trust gaps. But managers also struggled to identify AI-generated content. They couldn't tell the difference. This involved 130 mid-level managers at a major consulting firm. So these are the firms that should be using AI the most. Consulting firms, like all that BS work that people are doing where they're like using templates and copying stuff into PowerPoints, like AI, super effective at all that crap. And basically, the result is if you tell your manager you used AI to do something, you're not going to get rated as highly as if you just kept it to yourself. And I'm willing to bet that in corporate America, this is going to be the case. People devalue the work if you say you used a tool like AI. So what do? Do you keep it to yourself? Do you tell them? I've found that if I don't say anything anymore. If somebody asks me, I'll say, yeah, sure. I used some AI if they ask me how I did it, but I'm not telling people when I do something incredible by prompt engineering a result. I'm not going to be like, hey, check out this amazing thing I did with AI. No, I'm just saying, check out this awesome thing I did.
Yeah. Cause to some extent it shouldn't. I've been
It
thinking about
shouldn't
this a
matter.
lot, like growing up in construction. And I think about, in the 80s, my dad had a swinger hammer to hammer a nail to connect two boards. And now everybody has like these wireless guns that just shoot nails into boards. And that's like the adoption of AI. So you're like nobody was looking down on construction people that are not swinging a hammer and hammering in the nail, and they're using an automated tool to put the nail in.
Maybe they did it first though, right? I wonder what your dad would say about it.
Oh, he uses all these tools, of course. It's all these gadgets you got to buy.
But your dad's an innovator. Like you
right?
You inherited that. It's got to come from somewhere.
Somewhere, possibly.
I bet you that when all these tools came out, there were like the old guys who were like, these weaklings, they can't hammer like they used to.
I can hammer it faster. It's possible.
Or I can
but it's
hammer it
also
better.
very, like, building and construction's very labor driven, and you have to be efficient and build faster. And the market conditions drive that. And I wonder if this is different though for knowledge work. People are less there's historically been more of a badge of like, whoa, you worked really hard on that for days. Nobody's impressed. Actually, I'll give it an example.
Yeah, like that analysis that I did of the
brewery
financials, right? Like if I just given that to you, like David, you sent me that link to the investor website. If I just created that, edited it, made it sound more like me, sent it back to you, your mind probably would have been blown, right?
Yeah. You must have worked really hard on this for hours.
And if I tell you, now look, I did a lot of work on that. I had to engineer a prompt, and that took time, and I took a lot of thinking, and I was able to get that amazing output because I knew how to prompt engineer. I knew how to use Claude's projects. I've trained myself how to use all this stuff. So I'm not going to tell people, when I use AI to do awesome things, like I'm not going to be like, and I used AI to do this, because I don't think it helps. I think actually it makes people, look down at the work.
It reminds me of an old video of Steve Ballmer, who's did he ever become CEO of Microsoft, or was he always just the VP?
No, he ran Microsoft. Remember? And then he ran it into the ground.
And But he used to talk about, like, at one time, developers were all judged. Everybody talked about K-locks, like thousands of lines of code. And it's fundamentally wrong because if a good engineer could write something in 50 lines of code to do what somebody else wrote 1,000 lines of code. And it's not about the effort, it's the result, right? Did you solve the problem the most efficiently way you could? And that this is, again, it goes back to the culture. Like, what does your manager or what's valued at your company is going to determine if you should disclose this or not. But as society, though, might look down on you. It's like you're taking a job from somebody else. It's the lazy way to do the work. I could see some of that attitude.
I bet you that the same thing was said about spreadsheets when Lotus 123 came out. And I bet you that the people who love their 10-key calculators were saying, these lazy accountants using their spreadsheets, they don't want to learn how to do it the right way. And they're going like, watch me, I can go faster than that spreadsheet, ticking away on that. Same thing. The tech changes, but the attitudes don't. All right, David, I want to talk about a mega merger of accounting firms. Can I do that before we go?
Yes.
Baker Tilly, Moss Adams. They are planning to merge. The planned merger would create a $3 billion revenue firm, making it the 6th largest accounting firm in the U.S. Baker Tilly is currently ranked number 11 and brings in $1.8 billion in revenue. They have 600 plus partners and nearly 6,900 employees. Moss Adams is currently ranked 12 and would contribute $1.3 billion in revenue with over 400 partners and more than 4,800 employees. The merged entity, sorry, David, go ahead.
Does this will basically make them pass Grant Thornton to become number 6?
Yes, it will surpass Grant Thornton. It'll be just behind the Big Four and RSM. It will make Baker Tilly the largest non-Big Four firm in the Western region. And Moss Adams gets access to Baker Tilly's global network. The international Baker Tilly network reported $5.6 billion in worldwide revenue in 2024. So, David, as always, when there's a big accounting firm merger, we got to ask, what's going to be the new firm name? Baker Tilly, Moss Adams. Baker Tilly, Moss Adams. Tilly Moss? Mossy Baker?
Mossy Baker.
Baker Moss? Anyone got any ideas here in the chat? Got any good names? I came up with one.
It should be
Bat
Moss. BATMOSS.
What about Mossy, David?
Mossy
what do you
buns.
Think? Mossy buns? Freshly baked financial solutions? I have to disclose. Well, you can see on the screen what I used to do this. I used
Did you use
ChatGPT
AI to do this? Okay.
I used AI to come up with the name. This is actually the first funny name that ChatGPT came up with, and it's my favorite now. Mossy buns.
Mossy buns.
And the motto is freshly baked financial solutions. And David, would you like to describe the logo image here?
Well, it looks like a bread roll bun, but actually looks like a human buns in a bathing suit bottom with some steam coming off of it, which is the weird part.
Yeah, the thong bikini is mossy.
That's true. It does look like moss. That's true.
And they're hot, right? You can see the little cartoon.
There's some steam coming. Yeah, they're hot.
Yeah, so mossy buns. I think it's better than Forvis, don't you? I mean, it would be funny to see if ChatGPT could come up with a Forvis image that represents Forvis, because you and I said we thought Forvis sounded like a robot butler.
Yes, that's right. That would be helping Iron Man. Or if you were going to have an AI tool, you would call it Forvis. So you could, hey, Forvis, what is this?
Yeah, Forvis is the AI tool, right? Well, maybe when accountants are replaced by AI, then Forvis will have a real advantage because they can just embed a chatbot on their website and they can become an AI accounting firm.
Do you want to read our last ad? And I want to get to a story that's definitely worth covering. It's signs we're headed into a recession. It's kind of a fun story, but I think I want to definitely hit it.
A fun story about going into a recession? You have an interesting idea of what fun is, David. Because I remember the Great Recession quite well, graduating and not being able to get a job at Barnes & Noble with a college degree that cost me, I don't even know how much money. Six figures.
And what the article is, I have the tried and true indicators of proof of a recession. So we'll go through those. But if you want to read the ad for RoboDebit,
I will thank them. RoboDebit, thank you. Thank you for sponsoring this episode. As an accountant, you know the drill. Constantly looking up account balances, then computing and posting those routine journal entries for loan interest, COGS, estimates, commissions, or salary reclasses. Wouldn't it be nice if this just happened automatically? Well, now it can with RoboDebit. This brilliant new app automates the posting of daily, weekly, or monthly journal entries, all based on an account balance that you choose. No more waiting until month end. Your financials will stay updated throughout the month. It's so simple, it's genius. Imagine automatically accruing loan interest, pulling 5% commissions from monthly sales, or reclassing 25% of wages to COGS exactly when you want, every day, every week, or every month, right on schedule. If you know your sales data is ready by 5 p.m., set the entry to post at 5:30 p.m. Done. RoboDebit launched its beta on January 1st, and you can be among the first to try it. As one of their Robo groupies, you'll get early access, discounts for the first 4 months of your subscription, have a say in future enhancements, and even snag some cool RoboDebit merch. If you are ready to let your journal entries post themselves, sign up as a beta user and become a Robo groupie. To do that, head over to accountingpodcast.promo/RoboDebit. That's accountingpodcast.promo/RoboDebit.
All right, so let's talk about signs we're in a recession or might be in a recession. So in general...
Well, I feel like we're going to have this debate now because last time we had a debate about whether or not we're in a recession for about 6 months. And then by the time the debate was over, the recession was over. Like, we never know if we're in a recession until after it ended, if it's a short one.
So a lot of times you can measure this by consumer behavior across beauty, fashion, and entertainment. So here's some key points of indicators that I have 6 of them to go through. Brothel business is down. So brothel earnings are down significantly since 2024.
European brothel business?
Yes. And U.S. brothel revenue in Nevada fell 20% last quarter. There's a stripper index. Strip club revenue in Vegas dropped 12%, and dancers are reporting lower tips in emptier clubs. There is the lipstick index. So sales of expensive lipstick items are down 15% at MAC and Sephora, suggesting people want to buy cheaper luxuries. You don't want to spend the money on the premium lipstick. Men's underwear index. Men's underwear sales have dropped 6%, indicating men are delaying non-essential purchases. Right? Underwear sales are down. Beer and dating behavior. Sales of craft beers have declined.
That's not good for our favorite brewery.
And dating app paid subscriptions have decreased, but the free app usage has increased by 12%. And then you see a lot of fashion and beauty shifts, especially with like hair coloring. A lot of women start going back to their natural hair color, and they get cuts that are easier to maintain so they can extend the length between haircuts. And they don't want to have to keep getting, if you get your hair dyed a lighter color, you have to keep going back and get the roots fixed. So you see these changes in these service
industries. You seem to know a lot
industries.
about this, David.
It's a whole article. I learned about this. So all of these things are happening right now in the economy, which are signs of recession.
Leading indicators, right?
Leading indicators.
How would we describe these? Non-essential luxury purchases? So you're saying basically like,
I mean, it's consumer behavior. Consumer behavior is pulling back on many fronts right now in the economy.
This is the stuff that gets cut first. Wow.
I have another kind of fun story if you want to touch on it. You always like these kind. The salary to be financially successful in 2025 based on a survey of Americans.
Yeah, we talked about something similar a few episodes ago. It was how much money you need to have in your bank account to be a success. And it was crazy. Like Gen Z had this insane idea that it was like, well, I'll let you go ahead and tell me what the new data is.
And I feel like we cover this about every other year. A survey like this comes out. So 51% of Americans say $100,000 to $250,000 a year is the salary needed to feel financially successful. 26%.
So just about half.
Just about half. You have to have 150 to 250K. 26% think 75 to 100K is enough. 17%, I mean, you're getting close to 20% believe you need 250,000 to 500,000, and 6% think you need over $500,000 a year to feel financially successful.
Secure or successful?
This is success. I mean, success is obviously subjective, but
right, because there's a difference to me between secure and success. Like, I feel financially secure, but I would feel a lot more successful if I made $1 million a year.
Yeah, that's true. There's a difference between secure and success, but
did they define success any further in this survey? Like, any more you can tell us from the survey? I actually think this is pretty reasonable. So half of Americans are saying it's $150,000 to $250,000 a year is success. And, you know, if you look at what you can get in a lower cost area, not in New York or LA or something like that, you can live very nicely, very comfortably on that. So that's good. That's healthy. But not a lot of people are in that bracket. Not 50% of the country, that's for sure.
No.
That income bracket is probably, well, it depends on where you are, but that would be a great question for Perplexity. I wonder if I can do that right now. So, what percentage of Phoenix, let's just say Arizona residents, make between 150K and 250K? Let's just do that as a normal.
16% in Phoenix, I bet.
That's your guess?
Yeah.
I said Arizona. So it's saying it's estimating 13.5% of Arizona households earn between 150 and 250K annually. So that's a gap. How about nationally? Let's do that. So now it's searching for the percentage of U.S. households earning between 150K and 250K nationally. Nationally, it's less than 10%, 9.32%. Only 12.66% of households earned over $200,000. So that is a big disconnect, right? We've got 51% of Americans saying I need to make 150 to 250K to be successful. Oh, so the estimate, I got this, I didn't read the full analysis. So it's saying roughly 13.2% of US households earn between 150,000 and 250,000. So we've got 51% saying that's what they need. Only 13.2% get that.
Yeah, and that's where you have disgruntled voters eventually. There's this pressure, this impression, I need to be at this point and I can't. You know, this country hates me and there's an opportunity. And like, yeah, it does affect people when there's that disconnect.
Yep. David, this has been a real pleasure. I got to run because I have a lunch to get to. Happy Friday, everyone. Hope you're all decompressing from tax season if you celebrate. And
we'll see everybody next week. Next Friday at this time, we will be at a movie theater watching The Accountant 2 premiere, which is, I'm super pumped about this.
We're going to fill a movie theater with accountants watching The Accountant 2. I can't wait to talk about it. David, I'm going to say it so that we have to get it on our calendar. We are both going to rewatch The Accountant 1 this weekend. I think you already did, right, David?
I did. I took a bunch of notes. Yep.
Okay, so I'm going to rewatch The Accountant, the 2016 movie. And you and I are going to do a special bonus episode. I think we should live stream it too. That would be fun. And we're going to do a CPE course all about what we learned from The Accountant, the original movie. So you'll be able to earn CPE for learning about all the accounting theory or not discussed in the movie. And we'll fact check it, right? We'll see if it's accurate. Hopefully we can fill a whole hour. If not, we'll do a half credit. So
it's a little dated because the big investigation, the head investigator guy, that's FinCEN, and they didn't mention BOI 1. So there's a little bit of dating issues going on in there. It wasn't a priority, but.
Don't forget, you can earn free continuing professional education credit for listening to this episode. That's NASBA approved CPE. Go to earmark.app in your web browser or download the free Earmark app from the App Store. you can earn 1 CPE per week for free. So there is no excuse not to finish your CPE requirement early this year. And if you want to support the work that we're doing with Earmark, please do subscribe. It unlocks unlimited courses and removes ads, and will get you a whole lot of benefits in the future as we add them. See you all around here.
App, you will, as soon as you go in the app, you'll see the Accountant 2 premiere. Click on it, click the registration button, and you're registered for the movie. That's all you got to do.
We doubled the size of the theater because we sold out. So we have extra seats. So if you're in the Phoenix area and you want to go see the Accountant 2 with a bunch of accountants for free and meet me and David,
it's going to be so much fun. I'm looking forward to it.
See you there on next Friday. Bye, everyone.
Bye.